Okay, it is the work of the accountant to prepare financial statements. It is the job of the auditor to express opinion on the financial statements prepared. So, the accountant prepares the financial statements while the auditors express opinion on those statements prepared. Now, I've been somewhere, let me share the story with you. I've been somewhere where a senior person did not know how to categorize audit reports. He didn't know whether the audit report was a good one or a bad one. He said something like the auditors had disqualified the accounts. Now, if you are in that class of people who do not know whether the audit report is a good one or a bad one, today is your lucky day. I want to demystify audit reports, the types of reports we have. Very simple for you to understand. Now, we have the first kind of report. We're going to start with what I call the unmodified audit report. You can call it unmodified or you call it unqualified audit report. They mean the same thing. So that is one. We'll say unqualified, unmodified. Good. Now, the unmodified or unqualified report is the report that is clean. It means the auditors have given you a clean bill of health. This is the most desired kind of audit report. Any organization that gets an unmodified or unqualified report means they have a clean bill of health. It means there are no material misstatements. It means the financial statements were fairly presented. It means they are accurate. It means there are no material misstatements. And it means that they have complied with the standards, either with GAAPs, that's generally accepted accounting principles, or with international financial reporting standards. That is a clean report. The second type of report I want us to look at is what we call the qualified. The qualified report is a report that is generally good except for something that is not good. Those things I mentioned, I talked about fair presentation, I talked about accuracy, I talked about material misstatement, absence of material misstatement, and I also talked about compliance with standards. Now, the qualified report is saying that except for something, overall, the report is okay. It's like saying this man is generally very handsome or this lady is very beautiful, except that they have a mouth odor. There is something that is not complete. So that is a qualified report. In fact, at that point where the auditor said, except for this, except for not complying with this standard, overall, the report is good. Now, that is what it means to qualify the report. It means that report is generally good, except for something. There is something that they did not do well. The third type of report is what we call the adverse. The adverse report is a report that does not show fair presentation. It is a bad report, basically. It means the auditors are saying, don't rely on this report. They are telling the stakeholders, they are telling people who use that financial statement not to rely on it because it is a bad report. It means they did not present fairly. It means there are material misstatement. It means they did not, generally the reports are not good. That's what it means. It means reports are not good. So that is an adverse report. The last kind of report is what we call the disclaimer. Now, for the disclaimer audit report, here, the auditors are not saying the reports are bad. They are not saying the financial statements are bad. They are saying that they did not have enough or they did not have sufficient evidence to allow them express their opinion. In other words, it's like saying, we don't know whether the reports are good or bad. But for us, we did not have access to the room. We did not have access to look at the statement. So we don't have enough evidence for us to be able to express an opinion. Get it very clearly. They are not saying the report is bad or that is good. They are saying that at this point, the auditor is saying that we do not have sufficient evidence for us to express an opinion. So there are 4 types of report. I hope you're happy with this. If you're enjoying this, please just click on the subscribe button and please like and share. There are 4 types, just to summarize. The first one is a good report, which we say is an unqualified or unmodified report. That is a clean bill of health. And the second one is a qualified, which is equally good, except for something. There is something. Perhaps it did not comply with standards. It has a K-leg. Then the third one is the adverse report, which is outrightly bad. The auditors say, do not rely on these reports. They are misleading. And then the fourth one is the disclaimer. They are saying that we cannot say whether the report is good or whether the report is bad. We did not have sufficient evidence to enable us express an opinion. The auditor is saying, sorry, I pass. I cannot express an opinion because I do not have sufficient evidence. So, it's the Accounting and Finance class. If you enjoyed it, share, keep a date with me for another one tomorrow. Thank you.